Hey traders, Raghee here. Welcome to Charts and Coffee for Tuesday, September 14. I hope everyone's doing well. Great to see you all. Hopefully we get through this session without a internet glitch. Thanks for the comments and the likes. It's always great to get the feedback. So let's get to it, shall we? Let's start off with the questions that we've got here. You know what? One thing before we get started with the questions, and that is a quick look at the economic calendar. Yesterday, we did talk about the economic calendar a little bit, and that was waiting on two events, one of which we have today, which is the CPI number that came out. Now, if you're looking at the rocket ship that took off on your charts this morning on an intraday time frame, that is your hot zone. That is your CPI economic high heat, high impact event. And that's, for a lot of us who are looking at this buy the dip continuing. Will the dip eventually end? I'll talk about that tonight. What are the signs of the buy the dip environment starting to lose traction? What are those warning signs we get? Because first of all, what is a buyable dip? That's in the free video at the Simpler Trading YouTube channel. You can check that out. And then throughout the week, I'll discuss more. Oh, is the cat making a debut? There he is. So what we definitely want to focus on is what are the signs as maybe the dip starts to win. So check that out for tonight's free video. All right, so let's jump into the questions. And first off, hey there, James. Good morning. In the YM is my hang on, let's get on over here. Is my first target 50% of the range? Okay, so what is the plan on YM? So kind of going back to that dip conversation. Is this a viable dip? Is this I'm looking at the ES. Is the YM a viable dip market? So no, right? It's a choppy market, and that's where half the range becomes the conversation, right? Half the range is where we need to be in terms of looking at where the first target would be. Yeah, so that's definitely something we're going to keep an eye on. Bear with me one moment, gang. All right. There we go. All right, so cool. So, when we look at the range, cut it in half. Absolutely. When we're looking at a market that is established sideways, the two grab candles sealed the deal for us, didn't they? And those of you that just took the indicator workspace bundle and you've got these tools running on your toss or running on your trading view, when you see those two red grab candles and you've got a yellow JT multi lower row, that's your environment to really say this is no longer a trend. It may have directional bias. There may be a tendency for more upside, but it's no longer a trend. So absolutely. I was trying to stay double green before the chop. Yeah, I still would stick with the calls. Remember, even after a trend transitions into chop, as the Dow has, we still keep the bullish bias. So good stuff, James. Great question. And yes, on the T1 at the midpoint. You got it. All right, Alex, good morning. Nice double green pullback in XLK. So green over green, what is that telling us? 8, 13, 21, and 34 EMAs are in the kind of structure where it suggests we're going to see higher highs in the market. This could be a 1-minute chart. This could be a 30-minute chart. This could be a daily, a weekly, you name it. It's really just a study of what those exponential moving averages are saying about the organization of price. And so when we have these organized in such a way that they're suggesting that we're going to see higher highs, those two rows of colors at the very bottom of every one of my charts tell me what the 8, 13, 21 are saying about sentiment and momentum, and what the trend via the 34 is saying about the likelihood of continuation. So yes, great XLK pullback. When we look at the way in which QQQ pull back, and I think I talked about this in the Simpler Futures Premium video, QQQ never touched a level that I can do anything with. This is a buy the dip market. Now I'm waiting for the dip. By the way, dip is synonymous with what? A retracement. Dip is synonymous with a pullback that I'd be willing to buy into. I really want to see that either at a 5th propulsion dot, which are the green dots there. That's the 21 exponential, or the actual wave. So while we didn't get anything on QQQ or NQ futures, take a look at XLK here. XLK, interestingly enough, pull back. Take a look at XLC, right? So I agree with you. I'm with you on that. Picked up some calls. Now remember, if you're playing XLK, you're really playing Apple. And that reminds me of, and I don't know if you're out there today, Ace, probably our youngest viewer. I don't know, 4 years old, Ace. I'm taking a look at Apple for you, buddy. All right. So your mom mentioned you like Apple. I think a lot of us like Apple. I think Alex likes Apple too. And so XLK means that Microsoft is in an environment where the organization of those two high concentration weighted stocks are going to suggest where XLK, right, our tide is more likely to go. And when you think about what ETFs have meant to us as traders since 2008 forward, this is really where, if there is sort of a sector secret, it's understanding the passive investing flow that's affecting the stocks and will continue to for the foreseeable future. And I like the setup here. You're going to get a lot more bang for your buck out of XLK, oftentimes in lieu of sort of picking a single stock to outperform. So I like where you're at. Now, as far as the target, let's see. As far as XLK, the target, you've got a 150. Oh, okay. So your first target, your first target could be up around 159.70, 159.80, easy. Yeah. And then you really want to see the market stay above 155. Yeah, 155 would be really important. I don't know that you need to give it to 154.60, but you've got the right idea, Alex. At least give the market enough time to attract some support at the 155 handle. Yes, I completely agree. Prabish asks, crude oil long squeezes firing, or do I wait for a pullback? So do I like crude? Well, again, structure-wise, this is a choppy market. So at this point, if you're trying to play crude from a momentum standpoint, and what we do in the room is this. Step one, let me get my drawing tool here. Okay, so step one is identify the sideways range environment, which we've been in since mid to late July. All right, so that's kind of, environment is always number one. And then we want to really start to identify the range. Now, I tried to play the range early on. Well, I did. I didn't try. I did here. But when we broke through the support through here, right, the only other thing helping us out was the 200 exponential prop top, right, which is fine. And then you could see that's where we started moving higher from. Next is the range continued, right, through here. So there's your next range in here. Cut the range in half. You've got your lower end of the range. You've got your upper end of the range. I like to front run the momentum breakout. I'm not interested in this. I'm not actually interested in the market breaking out of the range. I'm more interested in buying in the lower part of the zone. And that's what we talked about in the premium videos. This is how we've been discussing what to do with crude or any market that's in a range. So whether or not we've got a momentum play here is really more about a follow-through question, not about the original entry, which is going to happen down in that area. And then this is the follow-through. So if you're looking for further confirmation of strength, cool. But the trade setup has already fired off, really, I'd say most effectively on the 7th and on the 9th of September in that lower part of the range. We front run the directional bias, which is bullish. I agree with you. And then we just look to take advantage of higher highs. And if momentum triggers fire off, great. That's going to invite a whole new group of participants to this market. And that's exactly what we need, having positioned ourselves to front run that momentum. And that's the way we do it in sideways markets. I think that a lot of times, look, I love sideways markets when they give us the ability to identify a clear high and low. Those kinds of really steady, stable, predictable sideways markets are quite tradable. whether that be collecting credit or whether that be playing directionally. The clearer the trend was before the sideways market, the easier that it is. It's not that I don't want to play sideways markets. It's not that we don't play them. I just want you to prioritize 25% of your, well, I should say no more than 25% of your watch list, and therefore 25%, no more than, of your trade should be in sideways markets. No more than. Okay. Most of what we want to do should really be focusing on those double green trends. So I don't have a problem with sideways at all. It's just easy to let a little bit of that sideways market action creep into your trading book, and then you're really playing lower probability situations. So, but I love the long. I'm with you there, Prabish. But remember, we want to front run that momentum. All right, what do I think of AMD? Okay, so AMD, I actually like it a lot. It's pulling back. So in terms of what I want to do with AMD, I will think a little bit on the larger side of things first. I will think about the tide in lieu of the individual boat. I want to know, where is AMD weighted within the passive investing universe? That's that ETF sector secret. What is happening at the tide level? And then I can get more granular at the individual boat level. Do I like the buy here? I actually do. I'd like to see it stay above the 55 exponential. This pullback is looking more reminiscent of what we saw back in here. So I'll look for something similar where the blue grab candles won't phase us, and where additionally we're going to really lean on that 55 exponential for really validity in many ways for this trade. So yeah, I'm fine with the long position. So as far as the SMH goes, and I love how you're thinking about this. So as far as the SMH goes, it's buyable on a pullback. We're just not getting it. So this is where, if you see a sector like SMH, CLOU, things like that are pulling back, and they're not pulling back to a level that you can do anything with. They haven't, the dip is not an actionable one yet. Then we can get a little bit more granular into individual stocks, but be careful, because if you get into an individual stock that's dipping in front of, in a more exaggerated way than the tide, then if the tide goes out, if SMH pulls back, the individual stocks within that tide, the individual boats, are also likely to pull back, and that's going to leave you vulnerable to maybe losing the quality of the trend. It's going to leave you vulnerable to just more of a pullback. So if the stock and the sector are not in sync, just be aware of that. We want to see that, as much of that, in sync as possible. So as far as as far as the AMD, I'm okay with that, especially since SMH is not in our range. Good stuff there. Great question. All right. Let's see. Next question is MU. Let's see. MU. Looks like MU's in a squeeze. What do I think? Well, let's take a look. So everything is going to be structure first. So let me, there's two kinds of sideways markets. All right, there's two. And this is straight up Charles Dow 101. The first kind of sideways market is a narrow range, right? Narrow range. For me, 1.5 times the daily price movement range. So I will use a historical volatility to differentiate what is a wider range and what is a narrow range. So narrow is going to be 1.5 times the daily price movement range, ideally. Definitely less than 2, but 1.5 is my ideal. Then that means that anything over basically 2 times the daily price movement range starts to become distribution. So this is accumulation. All right. And whether you're a Dow fan like myself, whether you're a Wyckoff fan, 6 of one, half dozen the other, they're both going to talk about these market cycles, these market stages, phases, whatever you want to call it, these different behavioral cycles in the market. So it's just a wider, usually a little bit more unpredictable range. All right. So what variety do we have? Now, we know it's a sideways market, lower row of the JT multi, but what variety of sideways market do we have, distribution or accumulation? So I believe it's distribution. I'm not going to be looking for a squeeze. So we have two types of sideways markets and two tools here at Simpler to tackle that. So when I say that the range is wider, this is more of a ready, aim, fire plus the V-score type of setup. All right. So I want to see that I'm coming off of a standard deviation, that I'm coming off of an oversold, ready aim. And these are two really, now either can stand alone. You put them both together, you're not only studying the chop within the context of price behavior, but also volume based behavior, which is what the V-score does. So that's what I would do in this situation. I'm only going to look for, now in that narrow range, what ideally we're going to see, and this is just what I like to see, what we usually see is a lot of blue grab candles. So in a sideways range, if I have at least 4 blue grab candles, I'll start looking for a squeeze, but not until I get that. So again, think about the word squeeze. We want a compressed market. A compressed market is much more synonymous with what? Accumulation. Get the market environment right. It's not about the secret squiggles on your chart or the secret squiggles on my chart, right? It's not about the indicator, right? We all have different indicators that we like. There's no magic indicator. Where the magic happens is when you can sync up the underlying environment, which should dictate everything you do, from which indicators you use to which strategy you deploy, and even position size to a certain degree. Which indicators you use, which strategies you deploy are built on the foundation of first recognizing the underlying market behavior. And that is what that does. That's the JT multi. That is what the grab candles do, right? That's why I'm always starting with the JT multi, then moving on to the grab to get an idea of what that environment is. So I would say ready, aim, fire on MU. Okay, so that's the process. If you can go through that process, Steve, again and again, you're going to find that the setups that you're focusing on are going to very naturally determine what your strategy should be. So I'm not going to apply a trend following strategy to everything. I'm not going to apply a momentum breakout strategy to everything. It's going to be, is it a good pairing for the behavior we're seeing in that particular market now? All right, so I hope that helps. Thanks for the question, Steve. I appreciate it. All right, next up on the questions. Am I still bullish? Am I still bullish gold? Yeah, I mean, I kind of joke. I'm Indian. My parents are from India. I'm kind of not allowed to be bearish gold. But that being said, I like the idea of real yields continuing to drop. I like the idea of gold heading higher, but bullish might be a little strong, too strong a word, because what I don't have in gold is an uptrend. Take a look here. This is a sideways market since June 14. We've been seeing this market move sideways since then. This is not an uptrend. Now, the trend that preceded the chop was up. So there is still bullish directional bias. I'm still going to be more a fan of buying into support than I will be shorting resistance. So really, I'm not going to short resistance at all. So in that regard, tactically, I've got to be long, if anything. But remember that in sideways markets, and especially prolonged ones like this, I mean, look how long we can be really clear about the fact that we've been in a sideways market. I mean, we could break it down using the JT multi to the specific date. If you're looking at an intraday intraday setup, you can be as specific as what time the market began trending or lost the trend. So I like that specificity. I like that accuracy. And we know that we've been sideways for that long, but the trend that preceded was an uptrend. So it's hard to say that I'm rip-roaringly bullish, but I do like the idea of front-running the momentum in this area here. I think we could probably make our way up to this area here, and then we'll see if we can keep going higher or not. So I certainly would rather be long, to your point, AJ. No doubt. No doubt. So Next, oh, I'm out of time. Gosh, that 20 minutes goes by so quick. Todd is asking, can we get the code for VScore for TradingView? You sure can. It's available in the Simpler Trading store. We just did an entire indicator launch with not just my VScore intraday and end of day, but for my VWAP, V profile, grab candles, JT multi, all of the indicators actually that you see, I believe, on this screen right now are in that indicator bundle. So you can check that out. It's part of my premium toolkit. So yeah, you can check that out back at the Simpler Trading store. All right, gang. So with that being said, have a great rest of the day. Thanks as always for your time. Great to see you all here. Thanks for the thumbs up. Thanks for the comments and questions. We read them all. Myself, Lorna, Trish, we read those questions. They're going to dictate what conversations we have in the free video. And so if you do have a question, if you're catching this on replay, or if it's live, feel free to leave a comment or a question. Thanks for the thumbs up, and I'll see you all tomorrow. All right, gang, be good to each other. Until then.